Matt, State Street, your firm, you guys manage the Spider Regional Bank ETF. The KRE is the symbol there. You had messaged me that last Wednesday, the KRE had inflows that were 36% of the fund's assets in a single day. And folks, if you don't know it, that's unheard of in a single day. That just doesn't happen. And I'm sure, Matt, it's a record. Telling what's moving all the bank stocks and ETFs.
Yeah, I mean, that flow was a record, significant interest into regional bank stocks and banks overall. And I think it just comes down to sort of three central things. The first is earnings. The fundamentals are heading into the election were strong. And also you have the Federal Reserve starting to lower interest rates. And that could be beneficial because you have supportive loan growth. So that's the first point is that the consumer remains resilient. Earnings and fundamentals are resilient as well in the banking space. The other two is around the election and the outcome or potential outcomes for lesser regulation for the financial industry. And then again, this inflationary policies that are being put forth on the campaign trail that could lead to higher interest rates on the long end while the Federal Reserve is lowering interest rates on the short end because that inflation policies actually have a lag effect to it. So you have wider yield curves and that could be positive for net interest margins. So bank stocks saw that sizable sentiment shift right there.
You agree with this, I gather. I mean, it is rather remarkable, though. I mean, a 10% move up in these bank ETFs almost in 5 or 6 days. I mean, we're talking about big companies here. This is not, tiny little businesses here, particularly regional banks.
Yeah, we like KBWB, the large cap money center bank. So that's like Morgan Stanley, Goldman Sachs, the big bellwethers. And that was up prior to the 10% outperformance the day after the election. That was up 40% in the last year. So I agree with a lot of what Matt said. I mean, the fundamentals were leaning well for financials prior to it. And now this is just a catalyst to catapult it even higher. Remember, the last 3-4 years, Bob, 10 years, all people want to own is mega cap tech and growth. And you're starting to see changes on the margin. And again, the red sweep, which no one really kind of had in their bingo card, is a catalyst for you to rotate.
Yeah. I want to move on and get a couple other sectors in here. Matt, you also mentioned to me big inflows into crypto ETFs. I know you guys, State Street runs the Galaxy Digital Asset ETF, DECO. That just launched a little while ago, folks, in September. A collection of various businesses involved in crypto. But it seems to me like the big winner here is Kathy Wood and her ARK Invest ETF, ARKK. And maybe ARKB. These have been called Trump proxies. She owns Tesla in this, in ARKK. She owns Coinbase and Robinhood. Those are Bitcoin proxies. And the fund's now at a 2-year high. But she's also had massive outflows in the last 2 years. So yes, the prices are up recently, but outflows. And I guess the question is, the both of you, can Kathy get her and other people involved in speculative tech get their luster back with this?
Well, I think if you just take a big step back and look at the industry overall if you take a big step back and you look at the industry overall for digital assets, in the digital assets space, you have an administration that is going to be more crypto friendly in terms of their regulation policies and potentially lesser hurdles for cryptocurrencies and other digital assets to start to receive broad-based financial institution support. So I think when we look at this idea of transformational technologies or more speculative technologies that are developing in a fast-paced changing environment, the ability to utilize actively managed strategies to decipher the winners and losers around either regulatory-inspired headwinds or just ongoing usage and adoption of digital assets, I think that could be beneficiary. And that's obviously why we have our Galaxy partnership, because you need to understand how the cryptocurrency market is progressing, particularly around new administration policies.
So that makes sense, though. I've had my issues with Bitcoin, whether it constitutes money or is it separate asset class, but blockchain technology seems to be quietly advancing. I know most of the centers around Bitcoin and get-rich-quick schemes, but blockchain is advancing as a concept, as an investable concept, not just as supporting a cryptocurrency, but to do real estate transactions, to settle contracts, to do DeFi, smart contracts, clearing even for stocks potentially. It's potentially very exciting technology.
Yeah, for sure. I'm with you. I think that active management is probably better in something like very specific, like crypto and digital assets. So, again, I think there's certain things you should be active, certain things should be passive. Large cap equities, probably go passive. But what Matt's doing with Galaxy, seems like it makes a lot of sense. I mean, yes, like Trump's, cabinet will be pro crypto. I would just caution viewers that a lot of it's in the price. I mean, Bitcoin is up 80% year to date. A lot of it was front run on ETF flows. Yes, they've garnered a lot of assets, but in this business, entry price is everything, and it's rallied quite a bit. So I would just be careful and tactical with your entry points if you choose to kind of go ahead and buy either Bitcoin asset or crypto equities.